Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, July 23rd. Hope you're having a great day. We are having a pretty busy day in terms of what's on the economic calendar, so let's jump right into it. The big one, of course, is the initial jobless claims. We get every Thursday, and last week this report came out 1.31 million. This was a downward trend we've been seeing in this for about 15 consecutive weeks. However, this week has a different. It looks like it's going to break that. So the forecast is showing 1.41 million, and actually just exceeded that by 100,000 to 1.42 million. The recent closures again in many different states has led to again first time, higher round of first time people applying for first time benefits this time around. So unfortunately, instead of seeing that decrease, it increased this week. So we'll have to kind of keep our eyes on it. It is kind of an indicator that a lot of economists are watching in terms of where the economy is moving during this pandemic period. Last but not least, we got the leading economic indicators for the month of June. So in May, it was at 3.2%, and June it came down to 2%. So obviously not too good of news seeing that decrease. Leading economic indicators kind of gives us a little bit of foresight of what they kind of indicate as to where the economy is moving, and it obviously, as you can see, it dropped in June. Let's jump ahead here to the headline news. Stocks are down on the news of, course, the initial jobless claims. They didn't like that people are out of work again. We got more earnings reports. We had a nice one from Tesla the other day, and that was all nice and rosy. The big focus right now will be the next round of stimulus or recovery, however you want to phrase it. Some people think because it's going to last a while, this will be another stimulus, but other people want to say, okay, this is going to be like probably hopefully the last round of these packages, and this will be the package to get us back onto our recovery. So, uh, with that said, there's a Republicans and Democrats are getting into negotiations. There does seem to be a bit of a pretty wide gap between the two of what needs to be spent, what and how much to be spent. It could range from $1 trillion or a little bit less to over $3 trillion, and obviously that's a pretty big gap right there. And we'll have to see how that plays out. This could be, as it's not uh, as much of a dire strait as a feeling of a dire strait as it was back in was it March when the last one was out. This one may actually be a little bit more tense and could be dragged out a lot longer, so going past the July 30th period, or that the $600 per week will probably expire. So that may disappear for a period, and unless they come up with it in a new package there. Let's go ahead and jump ahead, see how the bond market is looking. Bond market is actually up for the day, as even though it's a red candle, but we started the day much higher, as you can see here. However, it has pulled back a little bit. We're currently up about 5 basis points from where we left off yesterday. Uh, it may have led some lenders come out with much better pricing this morning. If you're on the East Coast or on the West Coast, we're just getting our pricing now, and but we should have a little bit better pricing in terms of because like I said that yesterday was unchanged in here, but we had like about 8 basis points, 5 basis points. So these will kind of translate into a little bit better pricing, even though it's not that much higher from the previous day. But it's if you look at the accumulation, we're starting to slowly see some improvement there, which is a good sign. And as you can see, even though this is down for the day, it is kind of trending more upwards again. So we may see another little jump upwards as we have to deal with this next round of the pandemic with the economy. Let's see the Treasuries. Treasuries are also down, kind of challenging this floor of support. We're just hanging right about 0.58, just a little bit higher than that at 0.582. All right, so market rates I'm going to say are a little bit better today as a result of the accumulation over the last few days of the markets. And so in any case, if you guys are looking to buy a refinance, I'd love to be able to speak with you. These videos, if you've watched them before, these are strictly my opinions, my perspective, my views. It does not represent anyone else. I do work as a loan originator with a national lender. My lender, we deal with 48 states in the U.S. I'm specifically licensed in California. I've helped many different people in different scenarios. So if you'd like to talk a little bit about getting pre-qualified to buy your next property, or if you're looking to rate term refinances, or if you're having some issues, or if you have some thoughts about maybe financial planning in terms of using a mortgage and adapting into your financial planning, I'm here to help as well. I work a lot with financial advisors. We've constructed the mortgage as their debt and cash flow to work into their financial planning so they can accumulate either from college planning to early retirement to financial freedom, different aspects on what they could do to obtain those, and by using the mortgage as a conduit towards that. So I'll leave my email, my personal email, in the description. So just go ahead and reach out to me with via that route, and I'll get that. We can certainly discuss how we can help you out with your scenario. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video.